Hi, everyone, and welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those joining us for the first time, I'm responsible for identifying and analyzing digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examined token prices and the market events that act as catalysts for price change. Based on our research and market events over the past week, here's some notable token price movements and what we think drove these moves. As a reminder, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. Well, it has been quite an exciting week here, guys. The market has been selling off really hard. We are down to like about 73,000 in Bitcoin and down so much more in so many other alts. We also got news late last week that Trump has selected his new Federal Reserve chair. It will be Warsh, and he is expected to be more dovish on the economy. Other than that, though, we got a ton of tokens to talk about today, so we will get right in. First up, I'm actually going to talk about Moltbook, which is a really interesting crossover between AI and crypto that we're seeing in the last week. So over the weekend, there was a new development in the AI agent space that led to a flurry of on-chain activity. So AI developer Anthropic released something called OpenClaw, which used to be called ClaudeBot or Moltbot. After that, at about the end of last year, 2025. And that allowed users to run an AI agent on their local device that could act like a digital assistant. So what that meant is that you could then say, hey, like, I want you as this agent to go onto my computer. I want you to organize my meetings, do my travel for me, or whatever, go through my morning dashboards and give me like a readout report or something. But there were a lot of use cases there with essentially having this digital assistant that you could run locally from your desktop, which was not something you could do in the past. As a result, like I said, OpenClaw agents saw this surge in usage towards the end of January, which led to the creation of something called Moltbook. So Moltbook is actually a social networking platform, which is kind of similar to Reddit. It's designed for OpenClaw AI agents to actually socialize. So not just for humans, but for the agents themselves to go on and post, coordinate, comment on threads, upvote, downvote content. The idea overall is that they can kind of have a place to play. And so humans can go and observe what's going on in Moltbook, but they may not comment or do anything themselves. So the platform is it's super experimental. It did see about 1.5 million AI agent signups. This was just from like over the weekend on Friday. But then Moltbook also launched a token Malt, and that is supposed to act as a medium of exchange on the platform and in the future, and should be used in governance of the Moltbook project. So Moltbook came out and immediately like surged up, 20%, but it has kind of calmed down. It's only been live for a few days. It is technically down 75% since its launch price. But as I mentioned earlier, this was a really interesting AI experiment and definitely a really cool crossover that we're seeing between crypto and AI. These digital assistants that were launched, they can use your crypto wallets. They can do things in crypto for you in addition to other everyday tasks. So a lot of folks are kind of calling this like the advent of AI agents 2.0. Time will tell, like I said. Molt token is down 75% for the week, but we don't think this will be the end of Moltbook. Okay, next we're going to talk about Optimism. So last week, Layer 2 protocol Optimism approved a proposal to buy back OP tokens using 50% of their Superchain revenue. So Optimism operates as a Layer 2 optimistic rollup on Ethereum, and they allow other chains to use their infrastructure, which is called the OP stack, to build their own chains. For example, if you're familiar with Coinbase, Coinbase's L2 network base, they use the OP stack to operate. So anyway, anybody who uses the OP stack is essentially they have to kind of abide by the economics that are set out by OP stack and the Superchain. So the basically what's going to happen now is the portion of the fees earned on these other chains already flows through to the Superchain. But now 50% of those overall fees that flow through to the Superchain are going to be allocated towards buybacks. So this is pretty interesting, like I said, because there hasn't really been a lot of value flow through to OP in the past. And it is one of the older Layer 2 blockchains that has continued to kind of grow and operate at scale. Notably, Optimism did only generate about $580,000 in January in revenue, which would result in about $290,000 of OP buybacks. Considering OP's fully diluted market cap is around 950 million, these buybacks just aren't going to make much of a dent right now until transactions on Optimism and the respective stack start to see explosive growth. Optimism was not immune to the market sell-off. It is down 26% for the week. Okay, next up, we'll talk about Lido. So, Lido token, which is the largest decentralized Ethereum staking provider, announced their V3 or launched their V3 upgrade, last week. And this introduced a new feature called stVaults, which is pretty important. So, stVaults essentially provide a more customizable vault framework for stakers. Each vault represents an isolated staking position and allows the creator to control node operator selection, fee structures, sidecars, choice of their MEV providers, as well as modular deployment and composability. So this is a lot of fancy words, but basically in the past, if you went to Lido and you staked through them, you didn't really have a choice over any of these things, which maybe for the retail user, that was totally fine, totally acceptable. But the goal really of staked vaults is to give institutions, larger groups that want to stake on Lido's through Lido's staking infrastructure. It's supposed to give them greater control over how their Ethereum positions are staked and giving more of those customizations. What types of fees do they want to charge? Do they want to, be participating in MEV, and who should be doing that for them? Also, how, who should be in the different vaults. So versus just being random. So these are some really great customizabilities. There's a big upgrade that they've been working on for about 3 quarters now. For context, Lido is the largest Ethereum staker provider with about $21 billion in TVL, and they have about 23% of the overall staking market share. That said, Lido token down 22% this week. All right, last up, we're going to talk about Jupiter. So Solana-based decentralized exchange aggregator Jupiter held their Cat Lumpur conference over the weekend. Clearly, it was held in Kuala Lumpur. And they announced a bunch of major updates at this conference. So the biggest piece of news, hands down, is that Jupiter received a new fresh round of $35 million funding from Parify Capital. Parify supposedly purchased Jupe tokens as part of this $35 million investment through Jupiter. They actually, interestingly, settled the investment in Jupiter stablecoin, Jupe USD, which Jupiter is looking to kind of give more adoption towards. Jupiter also announced a partnership with the prediction market product Polymarket, and they're basically now aiming to bring prediction markets to Solana. First time doing so. The wonderful part about this is that Jupiter offers so many different liquidity options. They are a huge liquidity hub on Solana, and so they will be hopefully a liquidity hub for the new Polymarket markets that are on Solana. So the conference also covered a ton of other technical upgrades to Jupiter and their product suite, since Jupiter is kind of becoming this super app of the Solana blockchain. Even though they started off as a decentralized exchange aggregator, they do so much more. They do lend borrow right now. They are trying to launch, like I said, kind of more of a super app. They've been doing more with prediction markets. And now, they also have a ton of fresh funding to kind of go about and get these initiatives done. Jupiter posted about $183 million in gross profit last year. However, the project has faced significant token unlocks from early investors and team members. And this is probably a reason that we haven't seen this project really break out just yet. Jupiter, though, really did buck the trend this week with all this positive news and the market downturn. It is down 9.6% for the week. All right, guys, I hope you enjoyed our insights. Tune in here again next Wednesday at 1 p.m. Pacific to hear what's driving token prices.